Opendoor stock is heading into Friday's pre-market session holding steady above $8 per share. All week long, the $8 level has been tested and so far it's proving to be a real floor for the stock. Thursday's regular session closed at $8.01, down just 5 cents or about 0.6%, and in the aftermarket the shares added 3 cents. On paper those numbers look small, but in market psychology they can be a big deal. When a stock consolidates above a round number after a string of catalysts, it's often the setup for the next move. That's exactly the situation Opendoor appears to be in this morning. The story this week has been about much more than price action. It's about a company that is visibly shifting gears. Earlier this week, Opendoor launched a new buyer program in Dallas that directly attacks one of the biggest pain points in home buying: uncertainty. The program offers a 7-day home test drive and a 100-day home warranty. In practical terms, that means a buyer can move into a home for a week before committing, and even after purchase they have an extra layer of protection. This is not a minor tweak. It's a structural change in how people experience buying a home. If the pilot works, it could drive more buyers into Opendoor homes and speed up inventory turnover. Faster turnover means better economics, better cash conversion cycles, and potentially higher margins. The Dallas launch also gave Opendoor something it hasn't always had in the public narrative: external validation from high-credibility operators. Former Twitter COO Adam Bain posted on X about the program, calling it customer-obsessed and framing it as a solution to FOFO, the fear of finding out. That phrase is sticky. It perfectly captures the dread buyers feel about hidden issues, barking dogs, bad traffic, or simply realizing the home isn't right after the papers are signed. By using Bain's framing, Opendoor positions itself as the company eliminating FOFO. That's the kind of narrative shift that sticks with consumers and investors alike. When someone with Bain's background publicly praises your execution speed and customer focus, it signals to the market that something real is happening. But the Dallas pilot and FOFO aren't the only signals of change. Keith Rabois, who co-founded Opendoor and is back on its board, has been talking about Rome, a startup focused on assumable mortgages. He noted that Opendoor has had a partnership with Rome for over a year and that many great projects never launched under the old company. That's a tantalizing hint. Rome sits right at the intersection of housing and financing. In a high-rate environment, the ability to assume a seller's mortgage terms can be a game-changer for buyers. If Opendoor can integrate that kind of financing into its platform, it becomes not just a place to buy or sell a home but a true one-stop shop for ownership. The Dallas pilot could be the front door for a deeper product stack that includes financing, insurance, and other services, each adding to the company's defensible moat. Kaz Nejatian, Opendoor CEO, has been sending his own signals. During the aftermarket window he posted about a sleep pod arriving at the office, a light-hearted but telling symbol of his work mantra. It's a small post, but it says something about culture: work hard, rest smart, ship fast. More significantly, he wrote that Opendoor is close to shipping a relatively big change. Users won't notice it for a week or two, but he called it super bullish. He noted that the pull request shipped at 12:57 a.m. and that they're turning on feature flag soon. That's classic product-led rollout language. It tells you there's a meaningful change happening behind the scenes, even if it's not visible right away. For a company often criticized for moving too slowly, this is exactly the kind of signal investors want to see: founder-level intensity and rapid execution. Adding to that narrative, Kaz's first recruit to the company, Fodenunter, posted that he's worked at startups he started and sold, Shopify, Snapchat, and has seen many companies intimately, but that right now at Opendoor is the most exciting work of his career and hopefully the most impactful to everyone. This is a powerful testimonial. It shows that top-tier talent with deep experience at high-growth tech companies is not only joining but genuinely excited about the mission. It helps with recruiting more high-caliber builders and reassures investors that Opendoor has the human capital to execute its big plans. Put all these threads together and you see why the $8 level matters so much. It's not just a price on a chart. It's a psychological marker for a company undergoing a cultural and strategic reset. Each day the stock holds above it, even modestly, is another day of base building before a potential breakout. You have a Dallas pilot attacking FOFO, a possible financing play through Rome, a CEO publicly signaling big changes and founder-level hires, and top recruits calling it the most exciting work of their careers. That's a lot of momentum building quietly beneath the surface. For investors, the implications are compelling. The Dallas program could boost buyer confidence and conversion rates. Rome's assumable mortgage capabilities could enhance the platform's value proposition and reduce friction in transactions. Founder-level hiring and cultural reset could speed up execution, reduce waste, and sharpen focus. All of these factors combine to make Opendoor look less like a risky home flipper and more like a product-driven real estate platform with multiple revenue streams. The market still has to see proof points. The Dallas pilot is a test. The feature flag rollout is still under wraps. The Rome integration is speculative. The housing market remains tied to interest rates and macro conditions. But the combination of insider alignment, external validation, product innovation, and cultural momentum tilts the balance toward optimism. This is how turnarounds happen. First in the culture and product pipeline, then in the numbers, and finally in the stock chart. That brings us back to the short interest. For months, skepticism has been high and shorts have been comfortable pressing their bets. But as the company ships visible products, hints at bigger changes, and attracts top talent, the risk for shorts grows. A strong product announcement or earnings surprise can flip sentiment quickly and force covering. You can see early signs of this in the aftermarket action. 3 cents might not sound like much, but it's the kind of quiet accumulation you often see before a more dramatic move. If the stock holds above $8 into the open and volume picks up, the setup for a squeeze becomes more plausible. So as we head into Friday's pre-market, the picture is one of cautious but building optimism. Opendoor is holding its floor. The Dallas pilot is live and attacking FOFO. Rabois is hinting at untapped projects like Rome. Kaz is teasing a big chain shipping soon while installing sleep pods and hiring founder-level talent. Foddenunter is calling it the most exciting work of his career. These are the signals you look for in a company that's about to turn a corner. The next things to watch are clear. First, whether the $8 level continues to hold as support. Second, any data points on how the Dallas pilot is performing, customer uptake, conversion, satisfaction. Third, any official announcements about new products, financing tools, or partnerships. Fourth, how the market reacts when the relatively big change Kaz teased becomes visible. Each of these could act as a trigger for a narrative re-rating. In the meantime, the opportunity is to recognize the pattern. A stock consolidating at a key level. A company launching innovative programs that directly address customer pain points. A high-profile operator coining a sticky term like FOFO. A board member talking about untapped projects and partnerships. A CEO publicly signaling big changes and founder-level hires. A top recruit with experience at Shopify and Snapchat calling it the most exciting work of his career. This is exactly the kind of backdrop that often precedes a re-rating if execution continues. As you look at the chart this morning, remember that markets are forward-looking. The $8 level is not just about today's price, it's about what investors think the company will be in 6 or 12 months. If Opendoor can prove that its new programs work, integrate financing tools like Rome, and maintain its cultural reset, the stock could move well beyond this base. Shorts who have been comfortable betting against the company may find themselves under pressure to cover. That's why these quiet signals matter. Thank you for watching this Friday pre-market update. What do you think about the FOFO program, the Rome tie-in, and Kaz's hints about a big upcoming change? Do you believe the $8 support level will hold as Opendoor transitions into this new phase? Drop your thoughts in the comments below. Don't forget to like, subscribe, and share this video with other investors following the real estate tech space. Stocks often turn not when everything looks perfect but when fundamentals improve even as sentiment is still cautious. This may be one of those inflection points where the pieces start to come together.